Head of Retail Research at Motilal Oswal Financial Services, is joining us on this leg of the show. Siddharth, thank you for joining in. Good to talk to you as always. So tell us, earnings season is more or less over and done. What have been the hidden gems or the shining stars for you? Any new ideas that came to light?
Yeah, Surabhi. So, very good afternoon to you, to all the panel and viewers. I think the result season is almost over. We saw the overall earnings season being in line to better than expectations. There have been quite a few hits than misses, and as expected, the banking and financial sector led from the front, and that is a sector that continues to do well. If you talk about some of the other segments or pockets which have come out with very good numbers, real estate is a pack where we saw very strong performance, not only from the earnings front, but also from the pre-sales data that have been coming out at record high levels. So within that space, while we continue to like some of the real estate names, we have chosen you can say a building material or a housing theme through Kajaria Ceramics. The company is a market leader in the domestic tiles segment with almost 6% share, and it has consistently gained market share led by its superior distribution. In Q4, the company reported a strong growth of 14% in profits. Its volume grew 11%, revenue grew 18%, and EBITDA margins kind of remained steady at 14%, grew about 240 basis points on a sequential basis. Overall, we are expecting a very strong, steady earnings growth for Kajaria at almost 30% net profit CAGR over the next 2 years, led by volume growth as well as margin recovery. And we expect, along with the strong return ratios of ROEs of 22%, ROCs of 26%, and a healthy balance sheet, the stock to continue to do well. We have a target price of 1490 from 1 year perspective.
Okay, 1490 from the current 1290 that we are seeing on the stock. Siddharth, thanks for joining us. I want to ask you about the hotel stocks as well. Some of them have been doing very well. We're getting the, earnings, occupancy levels are good. There's no sign of, any kind of revision in prices as well. So looking very solid on that front. I know you like Lemon Tree, but take us through what you see as, the upside from here.
Yeah, Pavitra. So I think the sector has seen a steady recovery. Even in terms of if you look at the occupancy, the average room rates, what has happened is that last 1.5 to 2 years, we have seen that demand for the entire hospitality space has increased while the supply has remained constant, and that has led to improvement in the operating matrices for the entire hospitality sector. So right from the market leader Indian Hotels to mid-sized players like Lemon Tree, we had Royal Orchid reporting results yesterday. We had the numbers from the hotel segment of ITC. So everyone has reported a very sharp improvement in terms of revenue, in terms of profitability, given that bulk of the business is kind of fixed cost model. So with improving occupancy and room rates, the profitability is seeing a sharp improvement. So we expect this trend to continue, A, on back of steady flows, domestic tourist, B, the business tourist or the business traveling also picking up with economic growth. And now there is another impetus to the domestic travel industry with the government putting up some of the tax cuts that people have to give for international travel. So that could lead to, at the margin, some incremental flows from people preferring to do domestic travel compared to international travel. So I think the sector is poised for strong growth. Within that, we have seen the stocks have seen a sharp run up. Indian Hotels, is at a life highs, which we continue to prefer. Lemon Tree is gaining strength, and we like it. We have a target price of 115. We expect the occupancy to go back to its pre-COVID levels on back of improving demand. We expect the PAT CAGR of 36% over the next 2 years, and ROEs to significantly improve to about 20% by FY25.
What were the pre-COVID occupancy levels?
Yeah.
No, what were the pre-COVID occupancy levels? Siddharth, do you remember?
Yeah, so I'll tell you. So if you look at the occupancy in some of the, especially for lemon tree, some of the metros like Delhi, Mumbai, Hyderabad, the occupancy has gone up to 88, 84, and 87% respectively. So these are much higher than the pre-COVID occupancy levels. So on an average, what we are seeing is that the occupancy levels are across the aggregate basis is about 73%. And that should go up to sub 75-80%, which would be much higher than the 70-75 odd levels that we were seeing pre-COVID.
Okay, how soon do you expect this recovery to play out?
Sorry, I missed your first part.
How soon do you expect this recovery to that 70-75% kind of occupancy to play out?
So as I said, some of the larger cities are already seeing occupancy in excess of 80-85%. So there, the scope for improvement is kind of the stability will be there. The improvement in the tier 2, tier 3 cities is where the overall aggregate occupancy will start happening. We are already in the summer vacation season, and then I think the occupancy in this April, May has seen sharp improvement. So I think overall the steady improvement will be seen over the next 1.5 years for the entire hospitality space.
Okay, got that. Siddharth, thanks a lot for joining us today and taking us through some fresh ideas. It is time for a break on the show, but when we come back, we're going to talk about the commodity space, so stay with us.